When you consider investing, what is more important to you, growing your wealth or creating extra income for yourself? Let's talk about it. Hey guys, welcome to the hashtag Get Real Woke podcast. I'm your host, Frederick D. Scott. I am a private equity investor, business consultant, philanthropist, author, and a contributing writer for Entrepreneur Magazine. I have over 15 years of experience in the finance industry, and I used to own an investment banking and advisory firm. Currently, I hold designations as a financial modeling and valuation analyst, capital markets and securities analyst, commercial banking and credit analyst, and I also have a diploma in Islamic finance. And today is hashtag For the Free Friday. This is the time where I come on during the week and I break down things that I think you need to know in an easy to understand step-by-step format so you can learn these things, apply these things, and they can help you in your journey to achieve the things that you want to achieve in your personal and professional life. Now, before we jump into today's topic, I need everybody to hit the like button, hit the subscribe button, hit the bell notification, leave me a comment at the bottom of this episode to let me know what you think. And if you haven't already, I need you to hit the join button if you're on an Android phone, or click the link in the description or pin to the comments of this episode so you can join the hashtag Real Woke live chat community and be eligible to participate in the hashtag Learn to Earn Cash giveaway, where I give away a minimum of $1,000 every single month live right here on the hashtag Get Real Woke podcast. Now, let's get into today's topic. We are continuing our retail investing series right now. We're on retail investing part 8. And today's topic is the need for liquidity. If you remember, we're doing a series now on building an investment risk profile. So today's topic underneath that is the need for liquidity. And what is the need for liquidity? So let's define that. The need for liquidity is an objective requirement or desire to hold cash for ongoing current or future expected distribution needs. So when we talk about need for liquidity, we need to break that down into two different phases of the investment life cycle. And so when we look at the investment life cycle, it's really easy to just break it down like this. There are two phases. Number one is the capital accumulation phase. And what is the capital accumulation phase? The capital accumulation phase is the stage in your investment life cycle where you have the goal of investing for growth. You're trying to grow your assets. You're trying to grow your wealth. You're trying to grow your financial position into such a way to where when you finally decide to retire, that you're going to be able to retire into a comfortable lifestyle. So the types of investments that you choose and the types of investment procedures that you take and that you employ have the overreaching goal of creating additional wealth and asset creation for yourself. Investors that do this generally tend to, where they're investing in companies that pay out a dividend consistently, they generally, instead of taking that dividend and putting it in their pockets, they reinvest it and back into the business or into the fund to be able to compound their growth over time. So that is what the capital accumulation phase is. The second phase is the capital distribution phase. And what is the capital distribution phase? Well, the capital distribution phase generally takes, if we're looking at a time horizon standpoint, this usually comes in at the point of which a person is close to retirement or has already retired, and they need cash every single month to be able to pay bills, maintain their lifestyle, etc., etc. You find that people that are more seasoned in their age, a little bit older, are focused much more on the capital distribution aspect of investing than people who are in the younger stages of their time horizon or investment life cycle, where they're more concerned about capital accumulation. Now, let me give you a good example. So during the capital accumulation phase of an investor's life cycle, liquidity needs may be quite low, which would increase the investor's ability to withstand market risk. See, when you're in the capital accumulation phase, because of course you're trying to grow your assets, you're trying to grow your wealth to be able to retire into the comfortable lifestyle that you would like to retire into. Because you don't have a high liquidity need, because all the money you're investing for the long term, you can withstand economic down cycles, market volatility. You can afford for 1 year not to perform as another year, or a couple of years to not perform at the level that you would like those years to have performed at, right? Because you're looking at the overall long-term horizon, and you're hoping that on an average over a 10, 15, 20-year lifespan or life cycle, that your targeted rate of return on average is going to be met, because you're at the capital accumulation phase, right? Now, conversely, an investor who has a high liquidity need during the capital distribution phase of their lifespan has a reduced ability to withstand market risk, obviously. So when you're in the capital distribution phase, as I told you when we were defining these two different phases, of course, you're more focused on liquidity. You need money coming in every month or every quarter or biannually or annually that's going to allow you to continue to sustain your lifestyle. Is going to allow you to continue to be able to pay your bills. And so while you're still investing, you're investing into things that provide more liquidity, such as fixed income securities, where you can get a quarterly interest payment, a monthly interest payment, a semi-annual payment, or an annual payment, right? You're looking at the interest that the fixed income security or the bond is going to be paying you out, and you're depending on that as part of your overall income every month, every quarter, et cetera, to be able to maintain your lifestyle. And because liquidity is such of a high importance for you at the capital distribution phase, of course, your portfolio of investments can't withstand too much market risk, because if you're losing money in your investment portfolio, that means you'll have less money to be able to use toward your liquidity needs. So of course, then, if you're in the capital distribution phase, you have to take a lot less risk and invest in a lot less riskier things than you would if you were in the capital accumulation phase. And so, because remember, we talked about the fact that risk and potential return are directly correlated, in that the higher the risk, the higher the potential return. The lower the risk, the lower the potential return. So in the capital distribution phase, of course, your returns are going to be a lot less, but they're going to be a lot more stable as well, because the risk profile is a lot lower. So when you think about it, the need for liquidity has to be considered with respect to an investor's ability to take risk. Because again, as I just explained, where you are in the investment life cycle phase, and again, that's directly correlated to where you are in time horizon and what your need for liquidity is. Of course, your need for liquidity, be it high, if your need for liquidity is higher, then you're not able to take as much risk as someone who doesn't need liquidity in such an immediate turnaround time frame type of situation. So I wanted to come on and I wanted to talk about need for liquidity. I knew this podcast episode wasn't going to be that very long because I understand that need for liquidity is a really simple thing to understand, but it's not really, when you really think about it, it's kind of common sense. But if you're not thinking along these lines, then you don't know to think about these kinds of things, ask these kinds of questions, and consider these sorts of things when you're thinking about building your own investment portfolio based on the needs that you have. So I just wanted to come on really quickly. I wanted to share that information with you, drop that into your soul right quick. I hope the information that I've shared with you guys is beneficial. I hope you learned something. I hope that, you are beginning to shift your mentality from more of a speculator's mentality to more of an investor's mentality with a long-term outlook toward your investments and your overall investing goals. All right, guys. So that's really all I have for y'all today. I don't want to drag this out or belabor the point any more than I need to. I think I broke this down in the best way that I possibly could. But of course, if you have any questions at all, definitely leave me a comment at the bottom of this episode, or reach out to me directly on Instagram at Frederick D. Scott. I'd be more than happy to answer any additional questions you have surrounding this topic. So with that, thank you guys so much, as always, for spending time with me. Thank you for allowing me to talk to you guys, share the information that I have to share with you guys, and I hope it benefits everybody. Now, before I go, I definitely need everybody to hit that like button, hit that subscribe button, hit the bell notification, and like I said, leave me a comment at the bottom of this podcast episode. Let me know what you think. If you haven't already, definitely hit the join button if you're on an on an Android phone. And if you're on an iPhone, definitely hit the link in the description or the link that's going to be pinned to the comments of this podcast episode, so you can join the hashtag Real Woke Live Chat community and be eligible to participate in the hashtag Learn to Earn Cash giveaway, where I give away a minimum of $1,000 every month live right here on the hashtag Get Real Woke podcast. Lastly, I want to thank everybody who tunes in, who supports this podcast, who leaves comments, who reaches out to me on Instagram. I want to thank all of you guys, because you guys watching, you guys telling other people about this podcast is allowing this podcast to grow. Right now, we're about a little over 2,500 people, which is phenomenal. I really appreciate that. So guys, definitely keep sharing this information with other people. Share the episodes and tell everybody that you think can benefit from this information. All right, guys. Yo, thank you so very much again. And until the next hashtag for the Free Friday, I'm out.